TD made history in October as the largest bank ever in the U.S. to plead guilty to violating a federal law aimed at preventing money laundering. It agreed to pay more than $3 billion in penalties to resolve the charges. Governance expert Richard LeBlanc describes the allegations as something out of a movie.
The allegations included $57,000 of gift cards and bringing in bags of cash. It's actually a blemish to Canada's reputation for being well governed.
On the heels of that scandal, TD is making big changes, overhauling its board. CEO-designate Raymond Chun moves into the corner office in February, months earlier than TD previously planned, replacing longtime CEO Bharat Masrani. Masrani is staying on as an advisor, but his 2024 salary will be slashed by nearly 90%. 40 other executives will also see their compensation reduced.
People are wondering, well, who's responsible? And the CEO stepped up right from the very beginning and said, this happened on my watch. I am responsible.
Powers and LeBlanc tell Global News the accelerated plan may be because of pressure from regulators. TD did not respond to Global News' request for comment. TD's plea deal includes rare limitations to constrain growth.
A lot of their operations have been curtailed or had handcuffs really put on them if they want to expand or do further business in the United States.
Canada's big banks are often held up as solid institutions with robust rules to guard against criminal activity. But RBC made headlines at the end of 2023 when Canada's anti-money laundering agency imposed an unprecedented $7.5 million fine for failing to submit suspicious transaction reports. TD says it will hold a strategic review to reassess opportunities, productivity initiatives, and examine where it can invest or divest.
There needs to be displayed efforts at remorse and reform. And I think this is a step in the right direction.
And Gaviola, Global News, Toronto.